Hi, my name is Pat Keown. I'm a senior research analyst with Refinitiv Lipper, and I'm going to be speaking about fund flows activity for the week ended Wednesday, September 23rd. We'll start this week's report by looking at the overall fund flows results for our fund asset groups. Equity mutual funds had net outflows of $2.3 billion last week. Taxable bond funds and muni bond funds both took in net new money. Taxable bonds at $3.5 billion and muni bonds at $400 million. Money market funds had net outflows of $2.7 billion for the week. We'll look at the market activity that influenced this week's trading. The equity indices all suffered significant losses during the fund flows trading week. The Dow Jones Industrial Average, the S&P 500 Index, and the NASDAQ Composite Index lost 4.5%, 4.4%, and 3.5% respectively. It was a mostly dour week for the equity markets. All three indices posted losses in 4 out of 5 trading days. After starting the trading week with 3 consecutive daily losses, weighed down by continued COVID-19 concerns, lack of an additional stimulus package, and choppy economic data, the markets rebounded on Tuesday, September 22nd. The equity indices all posted gains that day, due in part to the congressional testimony of Treasury Secretary Steve Mnuchin and Federal Reserve Chairman Jerome Powell. Both economic officials reiterated that the emergency measures enacted by the Fed were working as anticipated, but they also warned that they believed that they had exhausted all the tools in their toolbox and an additional fiscal stimulus package was needed from the government to sustain the economic recovery. The momentum from Tuesday did not carry through to Wednesday, as the NASDAQ Composite, S&P 500, and the Dow retreated 2.7%, 2.4%, and 1.9%. Stocks faltered in the second half of the trading day as it became apparent that the additional stimulus package will most likely be lost, at least in the near term, to the political infighting over filling the vacant Supreme Court seat that was created by the passing of Supreme Court Justice Ruth Bader Ginsburg. Let's turn our attention back now to our fund flows activity. We'll do this by taking a more granular look at each one of the fund asset groups. We'll start with our equity mutual fund group. The $2.3 billion net outflow for equity mutual funds was the group's 22nd consecutive weekly net negative flow. Regionally, looking at the net outflows, we see that non-domestic equity funds, these are funds that are in global and international peer groups, accounted for $1.4 billion of the total net outflows, with domestic equity funds chipping in $941 million. Drilling down a little bit further, looking at the peer group level, we see large cap growth funds, a domestic fund classification with net outflows of $600 million, and emerging market funds, a non-domestic equity classification with net outflows of $405 million. Equity ETFs, net outflows from this group as well last week. They saw $12.6 billion leave their coffers. We see the Spider S&P 500 ETF with the largest individual net outflow at $8.4 billion. This is followed by the iShares Russell 2000 product with roughly $1.5 billion leaving their coffers. Conversely, we see money going into Invesco QQQ Trust, $1.2 billion, and Spider Gold, just a hair off of that number, also roughly $1.2 billion. Our next group to look at is taxable bond flows. If you remember, this fund asset group is on quite a net inflow streak. It's been extended to 24 weeks now. They took in $3.5 billion of net new money this week. And we see investment grade products doing well again, as the core plus bond funds and short investment grade debt fund peer groups took in $1.2 billion and $954 million of net new money respectively. We'll move on, look at the ETF side of taxable bond funds now. Net outflows last week for this group, they saw $2.4 billion leave, driven, as you can see, by a couple of high yield products at the bottom of the slide there. The iShares iBox Dollar High Yield Corporate Bond ETF and the Spider Bloomberg Barclays High Yield Bond ETF had about $2.9 billion and $800 million leave their coffers. At the top of the slide, we see the iShares 20-plus year Treasury Bond ETF and the iShares Core U.S. Aggregate Bond ETF with net inflows of $838 million and $413 million. Our next group to look at will be muni bond funds. This is another fund asset group on a large net inflow streak. This is the group's 20th straight week of net positive flows. They took in $375 million this week. Once again, as could be expected, led by funds from the national muni peer groups. The short muni debt funds and the short intermediate muni debt funds took in $325 million and $142 million of net new money each. Our last group to look at is money market funds. This group had net outflows again last week. They saw $2.7 billion leave their coffers. It was the ninth straight week of net outflows for the group. As you can see, though, this week's numbers are a little more subdued or muted from the previous 3 weeks. So that's maybe a turn in the right direction for the group. The $2.7 billion came from a number of peer groups led by institutional money market funds and money market instrument funds, which had net outflows of $7 billion and $2.1 billion, respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website. That can be found at www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.